I gave ChatGPT $10,000, at least hypothetically, and told it to build me a stock portfolio. No filters, no guidance, just pick my stocks. Then I compared what it chose against the S&P 500 over the same period. The results were not what I expected, and they tell you something important about how to actually use AI as an investing tool, and how not to. Let's get into it. AI has changed how we research, write, code, and create. The question a lot of investors are asking in 2026 is, can it change how we invest? There are already hedge funds using machine learning to trade. There are AI tools that scan earnings reports in seconds. But what about the average person, using a free AI chatbot to pick stocks? Does that actually work? I tested it. And in this video, I'm walking you through exactly what I asked, exactly what ChatGPT said, and exactly how those picks performed. This is not financial advice. It's an experiment. And like any good experiment, the point isn't just the result, it's what the result tells us. Part 1, what I asked ChatGPT. I kept the prompt simple. I asked, pick 10 stocks for a beginner investor in 2026 focused on growth and dividends. For each one, give me the ticker, the reason you picked it, and what sector it's in. No other context, no risk tolerance, no time frame, just a clean, open-ended ask. The kind of prompt most people would actually type. Here's what it came back with. Microsoft, Broadcom, Apple, JP Morgan Chase, Visa, Costco, Procter & Gamble, Eli Lilly, ExxonMobil, and NextEra Energy. A few things stood out immediately. First, ChatGPT's picks were almost entirely blue-chip, well-known names. No small caps, no obscure tickers. Second, it gave a reason for each pick. Not always a deep reason, but a reason. Third, it was upfront that this wasn't financial advice and that past performance doesn't guarantee future results. That last part matters. We'll come back to it. Part 2, how the picks performed. I took ChatGPT's 10 picks and tracked them, with dividends included, against the S&P 500 over exactly 3 months, March 12 to June 12, 2026. Here's what happened. Out of 10 picks, only 3 beat the S&P 500. The overall portfolio returned just 5.77%, versus the S&P 500's 11.03% over the same period. ChatGPT's picks underperformed the index by more than 5 percentage points. Let's look at the individual standouts. The best pick, Eli Lilly, up 18.98%. ChatGPT flagged it as a healthcare leader with strong pipeline momentum. That turned out to be exactly right. LLY had a strong quarter and beat the index by nearly 8 percentage points. Credit where it's due, also beating the index. Apple, at plus 115.77%, and Broadcom, at plus 114.90%. Both solid calls. Apple surged on a record earnings quarter, and Broadcom continues to benefit from AI chip demand. The worst pick, NextEra Energy, down 6.37%. ChatGPT cited it as a stable utility with clean energy tailwinds, but utilities got hit hard in this rate environment, and NEE underperformed the index by over 17 percentage points. The others, mostly flat to slightly down. Microsoft lost 2.64%. Costco dropped 2.50%. JP Morgan came closest at plus 9.76%, but still missed the benchmark. Part 3, what ChatGPT gets. Right here's what genuinely impressed me about the experiment. ChatGPT's picks were defensible. Every single one had a logical reason behind it. Strong balance sheet, consistent dividend history, sector tailwinds. It wasn't random. If you gave that list to a financial advisor, they wouldn't laugh at it. It's also fast. Getting 10 research stock ideas with sector context and reasoning in under 10 seconds is something that would have taken hours of manual research 5 years ago. As a starting point for further research, it's genuinely useful. And it's unbiased in one specific way. It doesn't have a commission incentive. It's not trying to sell you a fund or push a product. It just answers the question. Part 4, what ChatGPT gets wrong. Now for the honest part. Problem 1, its data has a cutoff. ChatGPT's training data doesn't include real-time market information. It doesn't know what happened last week. It doesn't know if a company just reported terrible earnings or if a CEO just resigned. For a tool being used to pick stocks, that's a significant limitation. Problem 2, it defaults to safe, obvious picks. Every stock on that list was a household name. ChatGPT is pattern matching on what has historically been considered a good stock. It's not finding undervalued opportunities. It's not doing the contrarian analysis that produces outsized returns. Problem 3, it can't account for your situation. ChatGPT doesn't know your tax bracket, your time horizon, whether you already own some of these stocks, or how much risk you can actually stomach. A good financial plan is personalized. ChatGPT's answer isn't. Problem 4. Confidence without certainty. ChatGPT sounds confident, it gives you reasons, it uses financial terminology correctly. This can create false confidence in the output. The reasons it gives are plausible, but plausible isn't the same as predictive. Part 5. How to actually use AI for investing. So what's the right way to use ChatGPT as an investing tool, not as a stock picker, as a research assistant? Use it to understand a company's business model before you invest. Ask it to explain an earnings report in plain English. Use it to compare two ETFs side by side. Ask it to explain what a PE ratio means, or how dividend yield is calculated. These are tasks where ChatGPT genuinely adds value, turning complex financial information into something understandable, fast. The actual decision of what to buy, that should be yours, informed by current data from sources like Yahoo Finance, Morningstar, or VidIQ for ETF research. Think of it this way: ChatGPT is a very smart analyst who reads a lot but stopped reading the news a few months ago. Use their knowledge. Don't give them the final vote. Here's the honest verdict on using ChatGPT to pick stocks. 3 of 10 picks beat the S&P 500. The index won convincingly. Portfolio returned 5.77% versus 11.03% for the S&P, a 5.26% gap. Its picks are reasonable, but not exceptional. It's a great research tool, a poor stock picker. It has no real-time data, a major limitation for investing. Best use: understanding concepts, comparing options, simplifying research. Worst use: blindly following its picks without doing your own verification. If you want to keep using AI to build smarter passive income strategies, not just for investing, but for building income streams, subscribe. Every week we publish a new strategy, grounded in real data and designed for people who don't have hours to spend researching. Next week, the best passive income streams in 2026, ranked from lowest effort to highest return. Subscribe so you don't miss it. See you next week.